Tech stocks extending Wall Street's decline on Monday following the U.S. Fallout from the U.S.'s blacklisting of Huawei technologies. For more on the tech sector and the implications for the broader markets, we're joined by Jay Jacobs. He is head of research at Global X Funds. Welcome, Jay. Now today, chip stocks and Apple taking the brunt of the decline following the fallout after moves by Google to suspend, I guess, some business from Huawei technologies, and also Lumentum coming in and saying that they're going to suspend shipments to Huawei. So what are the implications of these moves for investors in the context of this greater trade war?
Sure. Well, this was a very kind of targeted policy from the Trump administration around blocking Huawei, not only from selling into the United States, but also being sold to by U.S. companies. And I think that second part is what's affecting the Googles of the world, is that China is a huge market. Huawei is a huge player in China, and not being able to do business with this fast-growing company really cuts off one of their key growth initiatives. So it affects chip stocks. It affects some companies that provide, services like Android to cell phones, to laptops as well. But it's a pretty impactful block on a lot of U.S. tech companies.
So I think the New York Times is saying that it looks like the launch of the digital Cold War, because now it's on both sides. Before, China had the wall, and the U.S. is now building a wall saying you can't sell to China.
Yeah, I mean, what you're really seeing is a more kind of bifurcated tech world, which is so interesting because it's a digital world. So it's borderless unless you really want to enforce some sort of wall separating these companies. But that's exactly what we see happening. I mean, the U.S. has been very far ahead in technology for years, but China's caught up very quickly. They have, now they have chip companies. They have companies that build cell phones very well and network equipment. And, increasingly, I think the U.S. is seeing China as a technology threat and is trying to insulate itself from that threat.
So what should investors do in this case, looking at tech stocks? Because there are all kinds of tech stocks out there. Which ones are worth keeping? Which ones are worth selling or buying?
Exactly. So technology is a little too broad for us because you have hardware companies like these chip companies that are selling into China. But you have a lot of software companies that really aren't that affected by this move, in particular social media companies. Social media has already been a very localized market. Twitter really doesn't translate well to China. Baidu and Tencent don't translate so well to the United States. So putting up these walls doesn't really affect the software world, which is a little bit more bifurcated, rather than the hardware world, which depends on a global supply chain.
So on the hardware world, what would you avoid? Chip stocks, I guess.
Well, I think U.S. chip stocks will have an uphill battle. However, there is a lot of emphasis on 5G right now and trying to build out the next generation mobile network. So, if we can still have a lot of 5G investment in the United States, which we're actually seeing, and as part of the T-Mobile Sprint deal, they're committing to 5G in the United States. Maybe they can weather the storm over the long run, but I do think we will see short-term volatility as this trade war progresses.
All right, now the S&P 500 and the NASDAQ both trading back below the key 50-day moving average at that technical level. Is there more downside ahead as the way you see it for the broader markets?
I think it's unlikely because this market is so dependent on the Fed right now, and as long as the Fed continues to be supportive of these markets, I think people will realize there's just not that much downside, or if there is a sell-off, that it's going to be kind of a V-shaped sell-off with a quick recovery, as we've seen for years now. I mean, now the market is saying that there's an 80% chance of a Fed rate cut by the end of this year. So the market truly does believe that if there's ever going to be volatility and a sustained sell-off, the Fed's going to come to the rescue.
All right, I forgot to ask you in talking about Huawei. Apple shares are down sharply, down more than 3%. Apple, I thought, would benefit because Huawei is their chief arch rival in smartphones, and Huawei displaced Apple as the third largest seller in the world in smartphones, or second, I forget which. But on the other hand, I guess it could be seen as a potential target. How is Wall Street viewing Apple right now in the context of Huawei?
At least in the near term, they're looking at how to digest this new information and what's the trade. And because Apple is an enormous company with extreme liquidity, it's just going to take a lot of the brunt of that if people are trying to play options, trying to make it, express a view on this trade. But it really is increasingly a rival of Huawei. I mean, Huawei builds cell phones and tablets and laptops that look a lot like Apple products. And for the last year, Apple has been messaging that China is slowing down, and I think Huawei is a big part of that. It's a big market player in China that's squeezing out Apple. if China were to really retaliate, I think Apple would have a big target on its back.
I see. And finally, any stocks worth picking up at this point at these levels or sectors?
Yeah, so within the social media space, we really do like some of the domestic names, Facebook, Twitter. We also like some more kind of software services names. So in fintech, we really like companies involved in mobile payments, which is really more of a U.S. story, at least for the names like Square and PayPal. As well as in e-commerce. There's companies like Shopify that are doing incredible work kind of building on the backs of a strong consumer and a strong kind of small business environment in the United States.
Okay, thanks a lot, Jay. Fun talking tech with you. Our thanks to Jay Jacobs of Global X Funds. I'm Fred Katayama. This is Reuters.